Hello and welcome to this week's edition of Invest Africa. I'm Alicia Seckham. Although the number of reported fraud cases in Africa has decreased, the value of fraud and corruption cases reported between July and December 2012 increased to $3.2 billion, and that from 2011. This has created a negative perception of business integrity on the continent. Let's take a look at the report.
According to KPMG's third Africa Fraud Barometer, the number of fraud incidents reported on the continent has decreased from 503 between January and June 2012 to 348 cases between July and December.
The number of cases in the continent and in South Africa, it actually has been coming down. It's still unacceptably high. I think it's sitting at something like 47%. And so to the extent that because of the number of fraud cases reported, there's been a response by business in the continent in general and in South Africa in particular. And specifically in the banking sector, there's been a response to curb fraudulent activities. And to that extent, I think that it's actually decreasing.
The African continent still remains home to the highest number of reported fraud cases in the world, making it increasingly difficult to have a sustainable economic development and social progress on the African continent. In some regards, doing business in Africa is more of a challenge than an opportunity.
About 2-3 years ago, there was a reported high number of cases of fraud in business in Africa as a continent as a whole. And unfortunately, again, South Africa was reported to have the highest number of fraud cases in the continent.
The financial services sector is among those most susceptible to fraud on the continent.
The banks in East Africa had lost about $48 million to fraud, which is about 4 billion shillings collectively within the industry. And that is quite significant. That is quite significant. And of that, the lion's share is in Kenya. Probably about 40% of that, and the remainder is split between Uganda and Tanzania.
According to the International Monetary Fund, Africa's emerging nations have become a driving force for world economic growth. Due to the high number of fraud cases and financial services being the hardest sector, this might have a negative impact on the continent's overall growth potential. However, Tami Sokotu, the head of risk at African Bank, says although Africa appears to have the highest number of reported fraud cases, that won't stop Africa from being an investment destination, as fraud is everywhere, not just on the African continent.
Yeah, I think that we should not isolate Africa as a continent in the context that fraud is only happening in Africa. Fraud is happening worldwide, but indeed because we are operating within the African continent, and within the context of Africa, it is important for us to understand the levels and patterns of fraud in the continent.
So we're taking a closer look at fraud and the kind of impact it's having on doing business on the continent right now. And joining me at the desk this afternoon is Petrus Murray of KPMG. He's the global leader of forensic on that end. And then Carol McLaughlin is Executive Director at the SA Fraud Prevention Service as well. Welcome to you both, and thanks so much for joining us. Carol, let's start off with you, because we're looking at a fraud on the continent, a versus reality. Is the perception a reflection of the reality, or are we looking at a disconnect?
I think, we've got to look at it in the context of the size of the countries and the population and that type of thing. If we look at the stats that we can share from the members that file fraud onto our database, the members really comprise of the retailers, banks, telcos, and based on their input from last year, we're looking at about 14,500 fraud records listed on our database for the year. And that sounds a lot in the South African context, but if you compare that to the UK, for example, where SAFAS, the fraud prevention company that operates there, have reported that they have over 500,000 records that have been filed to their database. So I think that is indicative of the fact that fraud is a first world crime, it's not something that is unique to emerging markets or countries like South Africa or the bigger African continent.
And Beatrice, that highlighted in the insert as well, that we're looking at a global phenomenon here. But I asked the question pertaining to Africa because according to KPMG's latest Africa Fraud Barometer, we've had Zimbabwe, for example, showing a decrease in reported fraud cases from 8 to 6%. And on the corruption perception index, it's held a deteriorating position, moving from 154 to 163. So that highlighting the discrepancies that are potentially at play.
Look, to try and measure these phenomena is not an exact science. There's no comprehensive single data set that's available. And that's one of the reasons why we as KPMG look to tackle this notion of the fraud barometer, because of trying to get a handle on perception versus reality. Generally, our experience is that people base their perception on their personal worst experience or the worst experience of someone that they know, and then it applies to everybody. Now, Africa's not one country, and so we wanted to try and give investors in Africa and business people in Africa a more detailed sense of the divergent risk profiles from a fraud and corruption point of view by country. Some have got a really big problem. Some countries are doing really well.
So let's get into that, because I always highlight on the show that when you're talking Africa, you're not looking at this homogenous entity, and there are clear hotspots on the continent: Nigeria, Kenya, Zimbabwe, South Africa, accounting for 74% of all the fraud type cases that are reported on the continent. But those territories influencing perception and detracting from, some would say, the investment case that the other countries then put on the table. Just how much of a deterrent do you see it acting to investment?
Look, at the moment, I think Africa is extremely fortunate in that we have healthy returns on investment being offered. I don't think serious investors, multinational investors, can afford to ignore the continent. And the corruption and fraud challenges in other high growth or emerging markets, be they Brazil, Russia, China, they're all there. So it's still a competitive environment. So that Africa still needs to compete to attract investment. But I don't think it is. I don't think it's the reason people won't, or investors won't, come to Africa. It's the reason that they will look more carefully and that they'll weigh it up against other possible destinations. But I think the returns are still healthy enough to enable Africa to attract investment. But investors have got to be careful.
That's exactly it. I mean, it's transparency, though, about the situation that makes an investor confident or less confident about investing in a certain territory. And as we have these cases more so reported, it increases confidence, because at least investors know the risk that they're having to deal with venturing into these spaces. I know, Carol, that your focus is on South Africa primarily, but we've got Nigeria still sitting as the country with the highest value of fraud reported. That's sitting at about $3 billion, and this a more than 50% increase in value from the previous 6 months. So if we're taking a look at the South African context, what's the problem? Why aren't we getting more of a handle on things?
Look, I think we are. I think that the reason why we do struggle is because companies still see fraud as a competitive advantage. And the minute they start understanding the importance of sharing the fraud that they are picking up, it'll be beneficial to everyone, investors alike, because, I mean, without understanding exactly what the true picture is and how extensive it could be within some of the industries or sectors within the industry, you just really don't know what you're dealing with.
Beatrice, to what extent do you find that puzzling, the fact that you've got companies seeing this more so as a competitive advantage? Because surely, if it happens to one company, you get investors and the community at large becoming a little bit more apprehensive of the sector as a whole.
Look, it does defy logic. Your fraudsters aren't loyal customers. They don't stick to just one bank. They're going to shop around, and when they've got a modus operandi that works, they'll take it everywhere that they can apply it. But that's not an the underreporting is not an African phenomena. We have, representing a global organization, we have more challenges in some of the mature European markets where it's just not something that is talked about. You don't let people know how easy or difficult it was for you to be a victim. And the preference is to deal with it internally, to deal with it quietly. We actually, I believe, have a greater willingness in this, at least in the Southern African community, because no one's embarrassed to have been defrauded. I mean, it's pretty commonplace.
Well, we had the insert highlighting that business has been becoming a little bit more forthcoming with regards to responding in an attempt to curb activity and fraudulent activity. Let's take a look at the effectiveness of mechanisms like anti-graft commissions. I mean, those have been established continent-wise to tackle the issue, to prevent, to detect, to investigate, to prosecute. I mean, how do you rate the effectiveness of commissions like these, Carol, if we're looking at things from a follow-through perspective?
I think that's possibly where South Africa, in my view, is lacking, in that fraud is not something that is handled at a national level in terms of prevention of fraud. So you find that we've got these disparate associations and non-profit organizations that act on behalf of its members, but it's not conclusive and it's not holistic. So what we're seeing is that, we will have pockets of information, the insurance industry will have another pocket of information, and it's not all being pulled together and being tackled as one issue in the country. So we do find from our database alone, I mean, our members alone last year, from the ability to access the fraud data that sits on our database, they were able to prevent approximately 700 million rands worth of fraud. Now, I mean, that's not an insignificant number.
Yeah, cynics though would come to the fore, Petrus, and possibly say, are we winning the battle, or are fewer cases being reported with a higher monetary value? Your perspective on that?
Look, I don't think fewer cases are being reported. One's got to be careful when it comes to the monetary value, because this is a mega trend, and a spike or a drop in just one quarter or half a year can be an aberration. So one has to be careful of that and try and plot it over a long period of time. But I don't think that the numbers are lying regarding there being, albeit a marginal, decrease. But the point that you raised about whether the anti-graft commissions and relevant legislation is making a difference, it creates the ability to make a difference. It creates a playing field on which you can play. But take the United States FCPA, the Foreign Corrupt Practices Act. That existed for like 30 years before someone started to enforce it. Enforcement is everything. And you can have as many acts, as many regulations. Without enforcement, it's not going to make a difference. These commissions will be judged on their ability to enforce. And enforcement requires political will.
Yeah. To what extent are we looking at perpetrators becoming a lot more sophisticated? Because, of course, we've got evolving technology that sits on the side of the perpetrator to a large extent, bearing in mind that it also can mitigate against some of the risk that, that fraudulent activity poses for business if a business ups its security.
The challenge is trying to keep abreast of what they're up to, because they always seem to be one step ahead. So no, it's hugely frustrating, I think, for business to try and stay abreast of what is taking place, because every day you hear about a new technique or a new method that fraudsters are attempting to, in the financial services industry especially. I mean, last week we discovered a hacking situation that had happened with one of our member companies, and these things happen on a daily basis, and you never know what to look out for.
From the interactions that you have with business, I mean, you say that your database includes retailers, banks, telco companies as well. I mean, what are some of the proposals or endeavors they're embarking on to mitigate against risk like this?
Well, look, a lot of them have gone into the automated process, and from a turnaround time point of view, they're sort of compelled to go the automated route. So they've had to really develop, a lot of checks and balances within the actual automated system to ensure that they are able to detect. They also rely a lot on the behavioral scorecards in terms of, past behavior, current behavior, in terms of determining what the type of risks are that they need to look out for. But it's very difficult to pick up when you're looking at an electronic image of an application, whether the true person sitting behind that application is an innocent party or a fraudster trying trying to take you, and get money out of your business with illicit means.
We've been talking business broad strokes. If we hone down into the detail in terms of those sectors that are most exposed to stand out as victims of fraud most typically, I mean, government ranks first, then we've got citizens, then commercial business and retail, and fourth on that list is financial institutions. I mean, for you, when it comes to these hotspots specifically, what does that tell you about the kind of industry that is putting itself in a position that it is exposed to fraudulent activity?
Look, the stats that you're referring to there, those are the victim groupings.
Yeah.
One would expect, on our survey, financial services in that respect to be underrepresented, underreported, because we look at, our survey is based into frauds and corruption of a quantum that gets into the media. So you've got a host of rank and file, numerically smaller frauds that still get perpetrated. So irrespective of what that says, financial services are always one of the hotspots. I mean, it's where the money is.
Yeah.
Government will always be a trouble spot.
But reported more so because they're held under more severe scrutiny.
Absolutely. And very often the numbers are bigger. And you've got to distinguish here between fraud and corruption. Fraud has a clear perpetrator and a victim. Corruption is so blurred because there is no innocent participant. So I think corruption is most probably far more underreported than fraud. And the numbers, particularly in the contracting space, can be far bigger. But government is always at risk. And then the big players, the infrastructure entities, the oil and gas in Africa, those are the ones where the risks reside. And we saw in the last quarter quite a sharp increase in the retail sector.
Well, we're taking a quick commercial break right now, but when we come back, we continue conversation with both Carol and Petrus, and joining our conversation will be Habil Olaka. He's the CEO of the Kenyan Bankers Association, and that as we put the spotlight on the sector in which fraud is most prevalent, that the financial services space. Don't go away. Welcome back. You're watching Invest Africa. We're still focused on fraud on the continent and how it's affecting doing business in Africa specifically. We're putting the focus right now on the financial services space. And with me is Petrus Marais. He's KPMG's global leader of forensics. And also is Carol McLaughlin. She's, of course, the executive director for the Southern African Fraud Prevention Service. Joining our conversation as well from our Nairobi studios is Habil Olaka. He's the CEO of the Kenyan Bankers Association. Let's pick up on the conversation we were having. We had Petrus Carol highlighting that fraudulent activity most prevalent, one would assume, within the financial services space specifically. There's much incentive for being active in that space. What's your take on just how exposed the financial services space is to fraud?
Extremely so. Every customer touch point they have in the organization is basically at risk. So, the sort of the message we try to put out to organizations is do a fraud upfront check on every single applicant or customer before you engage with that customer.
Yeah.
Because you need to know who you're dealing with.
Well, we've had the Kenyan financial services space falling victim to this in a very big way. And Habil, it was actually scary, the kind of statistic we came across in the insert. $48 million lost to fraud within the East African space specifically. Take us through the status of fraud within banking in Kenya.
Yeah, thank you. Sometimes it's difficult to put a finger on the numbers that are normally quoted because most of them are the statistics are not quite actually available, and most of it will be based more or less on estimates. But having said that, I think the magnitude may not be quite something that we can say is not happening. We think we might be in that region in terms of level of exposure to fraud, and so as an industry we have tried to put some things in place to ensure that we mitigate that risk.
Take us through some of the detail on that front. What exactly are you looking at putting in place in order to curb activity?
Oh, quite a number, because at least within the Kenya Bank Association, we have got a specific committee called the Bank Fraud and Security Committee that reviews the trends, the typologies, the upcoming vulnerabilities in the system, and then recommend ways forward. Now, one of the earlier challenges we had was quite a bit of frauds were being committed through the check payment system. And we therefore put a number of procedures in place, like, for example, we put in the value capping mechanism where checks above a given amount will not be routed through the clearinghouse, but will be routed through what you call the real-time gross settlement system, which is less prone to fraud. Now, even with the value capping, we still found that the level of fraud through the check payment system was still on the higher side. So what we did is we came up with what we call the check truncation system, which converts the paper-based check voucher into an electronic equivalent, and the flow of information through the system is through the electronic base, which is less susceptible to fraud by the fraudsters. Now, that seems to be working pretty well. Now, towards the end of last year, another threat that we saw coming in, especially as we are approaching the festivity period, was that quite a bit of our ATMs, the ATM payment system was a target for the fraudsters. So we saw the level of frauds that were going through the ATMs beginning to pick up. And as an industry, we have also come up with a solution. And we are attacking it from two fronts. One is to convert the whole payment system, the ATM payment system, into the more reliable, the so-called the EMV compliant chip and pin payment system. So now, that will require an investment both on the infrastructure side and also on the card side.
So that's some of what's being done over in Kenya. We had African Bank here in South Africa making headlines very recently, Petrus, and that as fraudulent activity took place at the African Bank's Dundee branch, which was as a result of collusion between the bank's agents and then some of its customers as well. We had the company's CEO, Leon Kirkenes, highlighting that fraud emphasized the need for regulators and other parties to look at not only the lenders but also the behavior of customers. Do you think enough is being done from a regulatory perspective?
Across Africa, sorry,
Petrus,
across Africa, obviously we're dealing with a number of different regulators. So Habil must probably be best to comment on the level of effectiveness of the regulators in East Africa or in Kenya. But I think our regulators are strong in Southern Africa or strong in South Africa. The other issue that I'd be very keen to hear from Habil is, giving the African Bank example, are they also finding that in Kenya or East Africa that the most difficult offences to detect are the ones, or to prevent, are the ones where there is collusion between an internal party and a third party?
Well, let's take it to Habil and get your comment on that. I mean, what's your experience of fraudulent activity of that regard over in Kenya?
Yeah, I think we have detected cases of evidence of collusion between the internal staff and the fraudsters outside, and the role that the regulators played in that scenario is that the regulator keeps coming up with the recommendations and suggestions to the industry on how best to safeguard ourselves against that kind of trend. And so things like the KYC, they know you are. In this case, it's really know your employee well, so that the recruitment process has got controls in place to ensure that you are employing somebody that is not known to have committed anything. And as an industry, picking up from that, we are beginning to develop what we can loosely call a blacklist of the employees who have been relieved from employment from one member bank, not being able to find employment in another bank and continue with the same trend. So we are trying to develop a blacklist of such kind of employees so that we can have a reference point against which you can check before employment.
Carol, blacklisting just one option. We had Nedbank Retail Risk Executive Gavin Payne highlighting that they're looking at a total segregation, for example, between credit and sales departments, and sales consultants did not finalize and influence the outcome of a lending deal, for example. So that another way that banks are becoming a little bit more creative in terms of mitigating risk.
Most definitely. And what we're also finding, just to Habil's point around the employee, we have an employee database on our database as well, which is coupled to the fraud database. And there, we've got employment screening companies who are also participating and assisting organizations to ensure that they don't employ individuals who have actually been involved in collusion and fraud within the organizations that have dismissed them.
That's significantly important in a context where over the July 2012 to December 2012 period, fraud perpetrated by employees increased significantly to 22% from 14% in the previous reporting period. With that, we've come to the end of Invest Africa for this week. A big thanks to my guests, and thank you so much for having joined me. Beatrice Murray is KPMG's global leader for forensic. Carol McLaughlin, in the meantime, is Executive Director for Southern African Fraud Prevention Services. And we had Habil joining us from our Kenyan studios as well. He's the CEO of the Kenyan Banking Association. From me, it's goodbye.